after Liberation Day, the following week when things went absolutely crazy and everything sold off in America, right? Like people were just hoarding cash around the world. Cash, cash, cash. Cash is king, especially when there's not enough dollars in the world because we're not expanding our money supply because the Fed has been restrictive.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Happy Earth Day. It's Tuesday, April 22nd, and it is Earth Day. And it matters. We only have one planet. So let's try and save it. It's not a political statement. Let's just be kind to our planet. It also, I believe, is a National Admin Day, Administrative Executive Day. I don't have an admin, but there are those that are out there, and send them some cookies. Send them some Tiff's treats. Yesterday is normally when I get my video out. I apologize. Everyone knows we sacrifice so much for our families by working hard, which means we sacrifice the family time. Don't get to see our kids, don't get to connect with our spouses, don't get to do all this stuff. We're on the road, we're working hard, it's super busy. And so I had to invest a little time in a dinner for our 13th wedding anniversary. So box checked, I know, I sound so romantic. All right, back to you, which is what matters, is it's 7:15, I have two people sitting at a dinner table 30 minutes away that I was supposed to be at 15 minutes ago, but I've got to get this out. And so hopefully they can watch this video and kill some time before I go over there. Lot going on. The public comments between President Trump and a chairman, Fed Chairman Powell, although he's been taking the high road and being professional, were very interesting. I think it's worth talking about. I don't like talking about conjecture or gossip or whatever, but the markets were moved by the comments. And so what I will say is, again, for like the second or third time in a couple of weeks, there is a Trump put in the market. And I want to explain what that means. So though after Liberation Day, the following week when things went absolutely crazy and everything sold off in America, right? Like people were just hoarding cash around the world. Cash, cash, cash. Cash is king, especially when there's not enough dollars in the world because we're not expanding our money supply because the Fed has been restrictive. I'm going to explain that and how it impacts all of our businesses. Remember, we talk a lot about the flow of money, and we need dollars in the world. So when every single asset class seemed to be selling off except for gold and Bitcoin lately, which are, very small market caps and clearly not enough to, stimulate our economy, much less the global economy. The Fed presidency stepped in and said this 90-day reprieve is on. We're going to pause, okay? And so Treasury yields started coming back down. We saw the stock market rebound, and money started flowing back into equities. And then this rhetoric lately where President Trump, and by the way, I have a completely unique take on this. Remember, he did this his first term in 2016. President Nixon famously threw like Martin, the Fed chair at the time, up against the wall because he wouldn't cut rates. I mean, this is going on forever, right? So the independence of the Fed is very frustrating because when a president needs the economy to have the skids greased a little bit, expand the money supply so GDP can grow, so tax revenue can grow, so things can be rosy, so jobs can grow. Maybe a little inflation at the cost of inflation, although inflation's pretty good right now. I mean, it's at 2.4%. Core PCE, same place it's been for 40 years. So, but maybe there might be some inflation possibly from tariffs. We don't know. We're just going to sit and wait. Well, that's why Trump is upset. I don't know if that's the right call. It's probably wise to wait until the May Fed meeting, maybe even the June meeting, to see if, there's how bad the inflation is. The Fed has already said on the record the tariffs typically give a short-term one-time bump to inflation, and then it smooths out over time because, people don't just go buy stuff because it's expensive because of the tariff. You just buy other stuff, just like we did after COVID. And by the way, at 9% inflation, there's no way we're coming anywhere near that. We are the most resilient, amazing, liquid, incredible consumer in the world. And so this whole back and forth is just political theater to me. So what's funny is how well Chairman Powell is playing this, because he knew this was coming. He's been questioned about, if he's going to get fired, can he be fired? He's like, I can't get all that. We're independent, blah, 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 which he needs to be. A steady hand, independent of political influence, even though every president tries to influence the Fed, of course. By the way, there's tax cut extensions looming. There's a budget being negotiated. All these things that would love for the Trump agenda, from their perspective, to have lowering interest rates and expanding money supply to grease the skids around the world. If they're going to tariff the hell out of auto parts coming from Germany, and if if cars go up $6,000, maybe $10,000, but if rates come down half a point, boom, you just financed that. The payment got less. We sell payment all the day, every day. So there's a lot of reasons for the Trump administration to want the rates to come down. And emergency, intermediate, preemptive cuts, not going to happen, because then it shows that we're in panic. We're not going to do that. But with this whole tariff thing and the way it rolled out, which I understand is disruptive, and we're trying to get people to the table, and it's working, and we're negotiating, and I think the worst is over, in my opinion, especially with China. Can't get much worse than that. Chair Powell's like, well, we're just going to sit back and wait. And so the markets are kind of slowly trying to decide, like, how bad will GDP growth be? How bad will our economy be? Will jobs break? Jobs haven't broken yet. CapEx spending is down. And so typically when there's less capital expenditures and less credit being given out, although the banks, when they reported earnings, we're in earnings season, they say, hey, everything's good. We're expanding a bunch of credit. There's a lot of moving parts here, right? But, the bottom line is, like, there aren't enough dollars in the world to do business. M2 money supply, you're welcome to look it up, has been shrinking. It kind of took a little bump there at the end of the Biden administration, where, there was some federal expenditures and things going on. The biggest driver of inflation is the government spending by far. And so I think it was announced in Tesla earnings, or somewhere reported that Elon Musk, CEO of Tesla, and all things Earth Day-esque, right? No gas guzzling cars and rockets and Starlinks and all this stuff, robots. Anyway, he's going to wind down his Doge role next month, or take less of a role, is what the headline is. And so I'm not a financial advisor. I'm not responsible for your losses, only your profits. Tesla reported a horrendous quarter, like 20% down on revenue. And the stock kind of went up because he said, hey, I'm back. I'm coming back. I'm going to stop doing this government stuff and, kind of focus on my core business. I guess that's why it rallied. But who knows, tomorrow, before you guys wake up and watch this video, the stock market could be ripping Tesla down to shreds. I don't know. That's why I don't say I'm a financial advisor. But, all these parts are moving, and we have a shrinking money supply. We need more money. We need more credit. Cash is here, and then that gets levered up into credit, and then we grow our economies. We offer home loans and car loans and credit card loans, and we do trade, and we connect with our partners, and we pay for our military to doing a strike on Iran when they don't want to let us see their nuke plants. So then we take out their oil, which craters, this industry and that industry and all these different things. Like, how are we going to pay for all this stuff? So it all flows, and that's why we talk about the flow of money here quite a bit. So I know I'm throwing a lot at you, and it's a little bit rambling, and I just had to get some stuff off my chest because it helps me think, and I hope it helps you think and gives you some nuggets to deal with people. Now, Housing Wire has put out an incredible article. James Clyman put out, and of course, you watch Mike Simonson and Logan Motorshami, and of course Sarah and Clayton, everyone over there. They are putting out great content. I think listings are up 30% year over year. Maybe it was 35%. Like, home listings being up is a good thing. That is a healthy housing market. And everyone wants to cry about tariffs and talk about Trump and Elon, being a fascist and all this stupid rhetoric. Housing's in a good spot right now. I've talked to a lot of realtors. I talked to some realtors today, just kind of getting a litmus test in the LA market. Talked to a friend of mine at the Altman Brothers, famous for $1 Million Listing. Not one of the Altmans, but one of their really, Tommy, one of their great agents over there. They're seeing some really great traction. Maybe not necessarily in Beverly Hills, where like there's fire risk, but in other areas they're doing well. And so people are buying, and not just, rich people, everybody. Our locks are up. We do a ton of manual underwrites. government rough credit deals across this country here at PRMG, and the locks are up and business is flowing, and it's spring purchase season isn't busy. So the whole tariff thing will get worked out over time. I think the worst is over. Hopefully the stock market believes that. Hopefully it comes to fruition. And, seeing a healthy housing market where the trend is still for lower rates over time, that's a good thing. So we'll get back to you later this week with some more stuff. Have a wonderful, only 10-minute video review. Cheers. Hey, it's KP coming to you live from Corona Del Mar. Oof, what a rough week. Had some food poisoning from hanging out with my buddy Emil and Tano from A1 AMC and Easy Funding. We had a little Mediterranean meal out in Glendora on Tuesday night, and I won't say the name of the restaurant because it's usually pretty good. Yesterday, I lost 2 pounds, so I'm feeling good about that. Enough about me. Let's talk about the markets. The Trump put is alive and well, and basically he controls the stock market, but not the bond market. And James Carville is the political strategist that got President Clinton elected, the last president to have a surplus in our budget. And James Carville, who's from New Orleans, famously, he said, when I come back in my next life, I want to be the bond market because it intimidates everybody. And he's right. The bond market is huge. Treasuries are huge. It is the credit that is given, bought, and sold to allow us to pay for everything. And there is obviously a transition going on in D.C. And the president, the agenda is aggressive and trying to move things forward, but it cannot outmuscle the bond market. And so every time the bond market gets a little flighty, which really impacts our rates, President Trump and the team, Scott Bessent and, all the other guys on the team, they have to step back and go, okay, yeah, all right, how about a 90-day reprieve? Okay, how about China today? You know what? This is the worst it's going to be. Maybe we'll go to 65%. How about automotive? We'll give you guys a carve out. So the news keeps getting friendlier, which is bond friendly, which is rate friendly, which is why we're back down into our normal range. The stock market freaks out on every tweet, every Truth Social post, which I've never been a part of, but I heard that a couple weeks ago, President Trump posted on Truth Social and said, now's a good time to buy. And if you had bought out of the money calls, you would have made like $1,000 trade into $1.2 million. So I guess I'll sign up if he's given stock tips. I am not a financial advisor. I'm not responsible for your losses, only your profits. But it's totally an echo chamber, but there's definitely some content you won't see in mainstream media. So there is that. One of the things I saw there reminded me the thing I've been talking about a lot. I just want to remind everyone, we're broke. We are broke. We are broke as a nation. We are a debtor nation. We are on an unsustainable path. We are broke. So just remember, everything you read in the media, everything you hear, every line, just start with, what would you do if you were broke? I read today that 132 offices of the State Department are being shut down. We're broke. Imagine if you ran a lender and you had too many branches. You had to shut some branches down because you're not making the money. Because 2023 was a tough year. We're broke as a nation. Shut down some HUD offices. We're broke. We're shedding a lot of jobs in D.C. We're broke. We are begging China now to make a deal with us. We're broke. We are doing collections on people with student loans, and we're going to garnish their wages. I don't know if that's the truth. I've heard actually, if someone with a student loan files a tax return and they think they're going to tax refund back, well, now we'll take their money back if they owe student loans because we're broke. So we're broke. And here's the thing: this budget, this framework for this, budget resolution that just got passed a couple weeks ago, it's just a framework to work within. Extend the Trump 1 administration's tax cuts, which obviously puts more money into the economy. And, it's debatable whether you think, the Democrats want to kill that and have $4 trillion of tax increases over the next 10 years. But I think there's enough meat on the bone to go look for fraud, waste, and abuse right now and get rid of some, shut down some offices, cut some jobs, and look at our budget. But I don't think this budget in this framework for this budget resolution is really going to come down and save us a bunch of money. So we know the last administration, went through crazy, $4 trillion in 4 years, spending almost $700 billion in October,
November and December before the presidency was over. So we're broke. We're broke. So I don't think we can reshore jobs quick enough to bring onshoring and, bring jobs back into our economy and reshape all these industries. And I think the administration is recognizing that. So at least they're not inflexible. They seem to be transparent from what I can tell. But, again, we're broke. We have no money. We're broke as shit. Just apologize for cussing. I'll talk about it a little bit more on the Crispin commentary. We do the last word every Friday at 10 a.m. Pacific time. You can check out Brian View's post and, my co-host, Courtney's amazing. Christy's amazing. She's an OG there. Check it out. We'll talk about this. I'm sure I'll talk about being broke a few more times. Existing home sales was a disappointment, but I'll tell you just a little teaser for one of the topics tomorrow. It's not that big of a deal. The Fed seems to have found like this rate line, right? Like if rates get below 6.5, loans take off like crazy. Okay. And if loans take off like crazy and that demand comes in, home prices go up. That's not good for inflation. So, if existing home sales goes up or down this month, next month, what's it going to take for someone to get off the shelf, if they're in a 3%, 3.5%, 4% rate? They're just going to need to build a little more equity over time to trade that in when they sell the house. And so I think, new sales, seems to be rocking. We're, between 4.75 and maybe 5 million units sold by the end of the year. Pretty normal year. So no big deal there. But just remember, the Fed is deathly afraid of what could happen, not what is going to happen, not what they know is going to happen. They've said over and over they have no idea. And they think inflation could go up. They did say tariffs could cause a short-term bump, but they don't know. No one really knows. And if labor starts breaking, they'll cut the rates. So keep a look at the 2-year Treasury. It's well below the 4.375 current Fed funds rate, which means they have clear guidance to cut, but they'll probably wait till June, the next time they have their dot plot, their summary of economic projections. Trump doesn't want them to wait that long because he needs cheaper money to help pass this budget that he wants to put through and get the tax cuts extended. He wants us to refinance our debt for new treasuries and treasury reissuance at lower rates, which is beneficial for him. And he's also mad that, Jay Powell won't work together with him like the Chinese central bank that does whatever, their premier does, So if she wants, to sell treasuries, to buy yuan and devalue their currency, manipulate their currency so they can be a cheaper trading partner around the world, they work hand in hand. They basically he tells them what to do. Unfortunately, Trump doesn't have that control, and he's been put in check. So he gets put in check by Congress, the legislative branch, and he gets put in check by the judicial branch. And now he's getting put in check by the stock market, the bond market. And that's the reality. And so, the flow of money is bigger than any one person, for sure, any one country, although our consumer is very strong. And yes, I know delinquencies are up and credit card debts are up and all that kind of stuff, but thank God for the boomers. They got tons of money. They're spending like crazy. We don't have a demand problem. We may have a supply chain issue with the tariffs and what's going on here, and that could create some inflation. But I'm personally not sold just because prices are higher that people are actually going to buy a higher price. They may just not pay for higher stuff. We already saw that during COVID. People stopped paying for higher goods, and they said, okay, I'm going to go buy other stuff. I'll go buy, going out to dinner and services. Well, PMI services data came out this week. It was a little higher. So the ebbs and flows, the flow of money, the flow of credit, the flow of everything, it never stops. Have a wonderful weekend, and I'll get back to you next Monday from Texas at the TMBA Annual in Arlington. Let's go. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.